Back to my YouTube channel, myself cajoshikumar. In this video we are going to cover the most important topic from your capital gains chapter, that is unit linked insurance policies. So watch this video till the end. Along with concept, we are also going to cover all the ICAI questions. So let's get started. Before going, we'll just go back into the history, what exactly happened with ULIPs, and understand carefully. So this was before 2012. So the premium paid, if it is up to 20% of the sum assured, then the entire maturity amount was exempt as per section 1010D. So this was before 2012. On or after 2012, no, they've made an amendment and they cut short 20% to 10%. They said if your premium amount is up to 10% of the sum assured, then the entire maturity amount was exempt. Okay, if it is more than 10%, then it was taxable. Clear? Now in 2013, they've made another amendment. They said this is only applicable for disabled people. Okay, for disabled people, they've increased the limit from 10% to 15%. Okay, now also these two rates are applicable. For normal people, 10% of the sum assured. For disabled ones, 15% of the sum assured. Okay, now let's understand what exactly they mean. What do you mean by ULIPs? Okay, in ULIPs, no, there are two portions. Okay, first portion will go for your insurance. Okay, and then the other portion will go for your investment. Okay, just like your mutual funds, no, you invest in mutual funds and mutual funds will go and invest in equities and they earn return. In the same way, ULIPs also do the same thing. Apart from that, they have an extra thing called insurance. They also cover insurance. Okay, so what these big players used to do is they found this loophole under section 1010D. Okay, if the premium amount is up to 10% of the sum assured, then the entire maturity amount was exempt. Now understand this with example. You paid a premium of 10 lakhs. Okay, and your sum assured is 1 crore. Right? Sum assured के ऊपर 10%, 1 crore के ऊपर 10% is 10 lakhs. Okay, so this is satisfying the condition of 10%. So the entire maturity amount of 1.2 crores is exempt, right, in the hands of the unit holder. So all these big players know, instead of investing in mutual funds, they started investing in ULIPs. Okay, so they were claiming exemption under section 1010D. Correct. So the government saw this and said you can't do this cannot continue this way. And in 2021 they have made an amendment. Okay, now they brought a new section only for ULIPs. Okay, even now also this 10% and 15% is still applicable. Okay, apart from that, there is another condition which was introduced. Okay, now if the premium amount is more than 2.5 lakhs, okay, let's say if that person is holding 4 ULIPs, aggregate of all the ULIPs, if the premium amount is more than 2.5 lakhs, then the entire maturity amount is taxable. Okay, now here in this example, if you see, you paid a premium of 10 lakhs, which is more than 2.5 lakhs. This is still satisfying the 10% rule. Okay, which is less than 10% of the sum assured. Okay, earlier this was exempt, but now since your premium amount is more than 2.5 lakhs, this entire amount of 1.2 crores is taxable. Got it? So it is not exempt as per 1010D. So they have introduced another charging section called 45(1)(b). Okay, they said it would be taxable under capital gains. Clear? So again in 2023, they've made an amendment for non-ULIPs, that is your normal LICs. If the premium paid is up to 10% of the sum assured, this condition is still there. 10% and 15% is still there. But apart from that, there is another condition which is added: the aggregate limit of 5 lakhs on all premiums. If the premium amount aggregate of all, if you're holding more than multiple, more than one LICs, aggregate of all the premiums is more than 5 lakhs, then in that case it would not be exempt under section 1010D. Okay, so this is for non-ULIPs. For ULIPs it is 2.5 lakhs and for non-ULIPs it is 5 lakhs. Clear? Now let's understand this. So this is specifically for ULIPs. Okay, policies taken before 1/2/2021. So in 2021, I said they've made an amendment to ULIPs, right? So there was an extra condition which was added. But before 2021, there was only one condition: 10% or 15%. Correct. So if the policy is taken before 1/2/2021, there was only one condition, that is premium amount does not exceed 10 or 15% of the sum assured. In that case, that was exempt. But if the policy is taken on or after 1/2/21, okay, 1/2/2021, so there were two conditions now. Okay, so this is that aggregate premium does not exceed 2.5 lakhs. This is the first condition. The second condition is premium does not exceed 10% or 15%. Clear? So here this is a chart. Here we have covered all the according to the dates, all the changes that have been happened. So this is very important for exams. You can finish it off in like 5 minutes. Okay, so before 1/4/2012, so this is 1/4/2012 at that point of time the limit was 20%, and then in 2012 they've cut it down to 10%. Correct? And then after 2013, this is for disabled people, they've increased the limit to 15%. So, and in 21 to 2021, only for ULIPs, they've made a change, correct? So 10 and 15% is anyways there. Apart from that, another condition is that your aggregate premium should not be more than 2.5 lakhs. Aggregate premium, okay? And then for non-ULIPs in 1/4 to 2023, there was another amendment. This 10 and 15% is anyways there, and aggregate premium limit was 5 lakhs. That was the extra condition that was put. Important point, even in the current amendment, you can see that as a clarification. Earlier for ULIPs note, there was a question mark whether it would be taxable under capital gains or income from other source, but they have clarified it by saying that all the ULIPs will be taxable as capital gains, okay, and non-ULIPs will go and sit in your income from other source, and any amount that you receive in case of death, that is exempt. Death benefit, any amount that you receive, that is exempt. Now let's do questions. It will be easy for you guys to understand. So date of issue is very important. You should know when they have issued. 1/4/2021. This is after 1/2/2021. So ULIP was amended on 1/2/2021. So annual premium is 2.5 lakhs, right? Premium amount is not more than 2.5 lakhs, correct? And then the sum assured point also, it is 10%. It does not exceed 10%. In both, it satisfies both the conditions, so it is exempt under section 1010D. Two conditions are satisfied, so it is exempt under section 1010D, correct? Now again, date of issue 1/4/2021, which is 1/2/2021 के बाद, correct? And then the annual premium is 5 lakhs, okay, which is more than 2.5 lakhs. So this will be taxable. It would not be exempt under section 1010D. It is taxable where? It will be taxable under section 45B as capital gains. Since this is a ULIP, so it would be taxable under section 45B as capital gains. Why? Because the premium amount is more than 2.5 lakhs. You don't even have to see the other condition. One condition is not satisfied, so it will become taxable. Now example 3, if you see here, there are two ULIPs, okay, and both of them have been issued after 1/2/2021. Clear till here? So if you see the premium amount, no, aggregate premium should not be more than 2.5 lakhs, right? So you should club all the ULIPs that you're holding and see if the amount is more than 2.5 lakhs. So here, if you see 1 lakh plus 1.5 lakhs is 2.5 lakhs. So it is well within the limits. 2.5 lakh rule is condition is satisfied. And then if you see the sum assured, no, it is 10 lakhs. 10 lakhs ka 10% is 1 lakh. 15 lakhs ka 10% is 1.5 lakhs. Okay. So here in this case, no, it satisfies both the condition. Your 2.5 lakhs condition is also satisfied. Your 10% rule is also satisfied. So in this case, no, it will be exempt under section 1010D. Both A and B would be exempt under section 1010D. Both the conditions are satisfied. Does not exceed 2.5 lakhs and does not exceed 10% of the actual sum assured. Clear? So your maturity amount will be exempt. Okay. Now example 4. So here also dates are very important. If you see ULIP X, no, it is issued when 1/4/2020, which is before 1/2/2021 se pehle. At that point of time, there was only one condition. See, 2021 se pehle there was only one condition, 10% or 15%. 10% for normal, 15% for disabled ones, right? So before 1/4/2020, 1/2/2021. So if you see, you should see only one condition, that is 10% rule. Sum assured के ऊपर 10%. Your premium should not exceed that. So here, if you see, your premium is 2.5 lakhs and your sum assured is 25 lakhs. So it did not exceed 10% of the sum assured. So the entire maturity amount 30 lakhs is exempt. You see, ULIP X, only one condition is applicable, and since it is issued before, the limit of 2.5 lakhs is not applicable, so that is exempt. Now another 3. ULIP A is issued 1/4/21, 1/4/21 and 1/4/21, correct? So this has been issued after 1/2/2021, okay? So in this case, if you see, you should see the aggregate premium amount, okay? Aggregate premium amount should not be more than 2.5 lakhs. That is your first condition. Here, if you see, this is 1 lakh and 1.5 lakhs, 2.5 lakhs. But ULIP C, if you see, that is 3 lakhs, which is more than 2.5 lakhs. So your ULIP C is anyways taxable. Keep that ULIP C aside. Okay. Now if you see ULIP A and ULIP B, this satisfied 2.5 lakhs ka condition. Okay. 1 lakh plus 1.5 lakhs is your 2.5 lakhs. That is satisfied. And then the second condition is your 10% wala condition. Sum assured के ऊपर 10%, if you see 10 lakhs का 10% is 1 lakh, 15 lakhs का 10% is 1.5 lakhs. So even your 10% condition is also satisfied. So your ULIP A and B, no, those are exempt. So ULIP A and B would be exempt under section 1010D. Your annual premium does not exceed 2.5 lakhs. Premium does not exceed 10% of the sum assured. Both the conditions are satisfied. So A and B is exempt, but ULIP C will be taxable. Would not be exempt under section 1010D. It would be taxable under section 45(1)(b). I hope this video was helpful. Please do hit that like and subscribe button. I'll be coming up with more videos like this. And yeah, please do share my channel with your friends and hit that subscribe button. Let's go. See you all guys in another video.